Analysts at EDC Nigeria say that the renewed interest in the equities market is tied to declining yields in the fixed income space following the Central Bank of Nigeria's 50 basis point rate cut, which translates to a lower cost of capital for companies. Joshua Chinga joins me now, who is a sell-side analyst at EDC Nigeria, joins me now for a review of the markets. Thank you so much for your time today, Joshua. Let's get into what we're seeing play out here in the markets. Give me your interpretation of what we're seeing.
Okay, as of yesterday, we saw the equities market hitting the 92 trillion mark. These levels were levels last seen in August, and we can see that all of these industry sectors actually recorded gains, apart from the oil and gas sector, which tapered down by about 1.27% thereabouts. As at yesterday, we're seeing the consumer goods sector going up over 90%. We're seeing the insurance sector going up about over 70% as well. The banking sector, however, came on the lower side, about 39% increase, but that can be explained by the little trade gains that were taken off the market through profit-taking activities in the late quarter of last year.
Quite a momentum.
This year, rather.
Yeah, quite a momentum we're seeing, especially what played out in the third quarter. But do you think that we could see a repeat going into the fourth quarter?
Oh, yes. I do believe we'll see that repeat happening now, especially in the consumer goods sector, where we're seeing an improvement in the rates. That could also translate to lower cost of debts, financing for these companies. Even in the agricultural space, we're seeing a lot of acquisitions coming up there too. We also saw recently Ella Lakes thinking about making an acquisition with they got approval for the acquisition of Agro-Allied Resources Planning Company as well, of Nigeria as well. Beyond that too, we're seeing Champions Breweries also getting their hands into expansion in the market. So I believe that the outlook is positive in that regard for the consumer goods sector and also the agricultural sector as we see going forward.
Still on catalysts in the market, though, your take on what we can expect in terms of the earnings impact?
Well, on the earnings impact, it means more profitability for these firms. We expect to see that going forward. A lot of bottom line hitting will come for, of course, translating to gains in the market, especially for consumer goods. On the insurance sector, we'll continue to see this increased activity over there as well. The recapitalization is really putting a lot of interest into the sector, as investors are believing that this will turn out to be profits for them at the end of the year, going into the next year.
But when you look at the trends we're seeing play out, especially with the fixed income market on liquidity and rates, let me get your take on how we're seeing that pass-through come out in the equities.
Okay, for the equities market, what investors are currently doing right now is that they are trying to reposition, reshuffle their portfolio, basically. I mean, we're seeing yields dropping to below 14% levels. I mean, FGN savings bonds that came out the last FGN savings, the current one that is currently open now, below 15%, and that's really not attractive to investors. And as we're seeing that, they're tending to come over to the equities market to reap some benefits from that.
Yeah, but when you look at the policy influence, especially that 50 basis point rate cut from the CBN governor, and we're going into November, what we can expect, let me get your take on what we see, and how sensitive is this rally to that future monetary tightening?
Oh, well, for now, it's still going to play out the same way. I believe that investors will still focus on the equities market regardless. With the new Eurobond coming up too soon, that will be the next way out for investors when it comes to the fixed income market. That's my own personal take on it. But beyond that, the interest in the equities market will still remain strong going into the last quarter of the year.
And foreign participation, we saw the FPI flows coming through, at least in the last, say, 2 quarters. But let me get your take on what we can expect down the line.
Okay, for foreign inflows, yes, I believe that foreign investors are now looking out for ways to get a higher interest in the market. With the rate cuts in the US and possible rate cuts down the line, investors are looking out to emerging markets in Africa too, and hoping that they could also see potential again. So I believe some inflows will definitely come into not just Nigeria, but Africa as a whole.
Yeah, because we're talking about renewed interest in the markets here. Before you came on board, I was just looking at the story about the FTSE Russell, adding Nigeria back on the watch list for future market return.
Yes.
And it more or less speaks to some confidence playing out in the markets here. But let me get your take on what this means in terms of what we can expect and what sort of signals are required to restore that significant offshore inflows into the markets here.
Well, the signals are already clear. we're seeing stable interest rates. At least our exchange rate has been really managed at the 1,500 and 1,400 levels. Even as last week, we saw it about 1,400 levels. Expectation is that we even close the year at 1,300, but that's what the market feel is. And that's built some confidence in foreign investors. As at last week also as well, we're seeing our reserves level hitting about 42 billion already. That's also some positive news. For foreign investors who are seeing all these metrics, it speaks to the effectiveness of these policies that the Tinubu administration has really put in place in building foreign investors' confidence. And I believe that would also move the needle in terms of inflows.
Yeah, because when you look at the market breadth on one hand and also look at the risk appetite, would you say that the rally that we're seeing in the market is broad-based? You know, are we seeing same level of activity from retail and institutional investors? And does this signal that deepening participation that we've been looking for in this market?
Okay, so when you talk about foreign participation in the equities market, I was looking at the numbers recently of how we saw a decline in foreign participation as at August, in August numbers. But if you still look at the domestic levels, we're still way, way higher than we were last year, about over 30% higher than we were last year. So we can say that beyond just foreign participation, the domestic investors as well are still keen on taking the benefits and profits from the equities market.
Yeah, because still on that, because I was referring more to what we're seeing in terms of the dynamics with the retail investors and the institutional investors. Would you say we're seeing more retail participation play out here?
Oh, yes, we are. We're definitely seeing more retail participation in the equities market right now. I mean, the news is everywhere now. With the a whole lot of rights issues are also going on in the banking sector. We saw Sterling just end theirs last week. FCMB is also on the roll now. And we're seeing that they are getting some real good inflows from investors. So I can say that, well, for the retail end, we're seeing that participation building because of information symmetry across the market. So I believe it's...
and for the rest of the fourth quarter, when you look at what's playing out here, what more signals or sector themes do you think would define, you know, the next leg of the market rally?
Okay. For now, more corporate actions as companies try to expand on their projects and, of course, build their asset base as well. I also see, you know, a whole lot of, towards the year rally, end of the year rally will also determine some participation in the performance of the equities markets towards the end of the year, as we also see their performance for Q3 coming up soon, before the end of the month. All of this will really determine how the equities market will perform going forward.
Do you think we'll get up to 50% yet to date? Quick one.
50%, we're getting there. We're getting there.
All right, then.
Definitely.
Thank you so much for the time. Just for Chinga there. It's still Analyst at EDC Nigeria.